What's going on, y'all? Welcome to another episode of Weeds Weekly with yours truly, Kevin Weedmark, aka the Mortgage Mouth. Hope everyone had a wonderful weekend. And Weeds Weekly is where I bring a little bit of a longer version of what happened this past week so we can kind of digest that, be on the same page. We're going to talk about this week. We're going to talk about, is it just a transition or is the R word here? And is it here to stay? So that's something that's been talked about today. And then it's time to strut your stuff. So we're going to talk about that as well. So if we dive into last week, look, it's back. There's no way to avoid it. Uncertainty is here. Let's get these little critters. What's going on, everyone? Evening, and welcome to another edition of Weeds Weekly with yours truly, Kevin Weedmark. And this is my longer format that I bring to you every week. I digest last week, I talk about this upcoming week, I dive into a couple different topics. We're going to talk about, is it just a transition? And then I'm also going to be talking about strutting your stuff. So if the longer format is not for you, I also put out a daily dose. It's a 2-minute version of what happened that day in the marketplace. Just give a quick subscription to my YouTube channel, The Mortgage Mouth, and you'll get all of those, and you don't have to be bored with this long episode. Not that I love doing them. I think they're great. Look, anyone that knows me knows that I can talk. So to sit here and just talk about what's going on, I mean, I could do this till I'm blue in the face, and I do it often over coffee. So if you are local, you want to grab a cup, please do not hesitate to reach out. All right, let's just dive right in. The biggest thing is, look, it's back. Uncertainty is here. We thought we were going to avoid it. We are not going to avoid it, and it's pretty much taking center stage. The other thing that we saw last week, tariffs are the talk of the town. They got implemented. Then we had certain pauses on certain industries. It gave traders hope with regards to maybe there'd be a future pause for certain industries that need it, whatever the case may be. So we saw a lot of volatility in the stock market and a lot of volatility actually in the treasury market. So we had rates doing a little bit of seesaw as well. The last thing that we saw in it, it always seems like on Friday, and we're going to get some more news this Friday unless it gets solved a little bit sooner in the week with the continuing resolution. But every Friday, it seems like there's some release that kind of leads us into the weekend. And really what took center stage last week was Fed Chairman Powell. And a couple things that I grabbed from that is he stated the labor market seems to be stable, which was quite interesting, given all the government layoffs and all the rhetoric that's out there, but he felt it was stable. And I think a lot of that is due to, we're starting to see an increase from the manufacturing side. We're starting to see the private sector pick up a little bit. It's not primarily government jobs that are being added. They're actually being cut. So that was one thing. And the other thing that he said, although it's been 2 years, and again, anyone that knows I'm not a big fan of the Fed, that they believe that their target rate of 2% is still in sight. They're going to be able to achieve it. However, they also talked of uncertainty. They were unsure of what continuing resolution with the debt ceiling, what the tariffs would mean, and so on and so forth. So it gave a little bit of a pause, but it was interesting to hear that they felt those two other objectives, which the Fed is really there for, right? I think it should be the stabilization of the dollar. I talked about that before. But in essence, they believe they have those under control. So that was interesting. This week, are we going to get another scorcher? If you remember, about a month ago, we had CPI come in, Consumer Price Index, and it was super hot. And what it did is it caused treasuries that day to spike all the way up over 4.8%, only to come all the way back down to under 4.6 by Friday due to retail sales plummeting, falling off a cliff, sending out speculation that the economy is struggling. So that was huge. But if we get another scorcher, I would be calling my clients and I would be telling them to make sure they're talking to their mortgage professional in anticipation of a potential hot reading on Wednesday and how to approach that. So that's something that I would be really looking at. They did not really adjust the forecast. It seems like they believe it's going to come in right again, like around 3.6, I think I saw. I mean, I can look it up quickly, but I mean, not that it really is really matters. Let's see, core CPI, they're thinking 3.2%, and 0.03. Last month's CPI came in at 0.5%. They're projecting once again 0.3. Again, if that comes in hot, we are going to see rates go up, regardless of what's going on right now in the economy. The other thing we got is Michigan consumer sentiment comes out. It's not as big as consumer confidence, that's for sure. But again, it's another temperature check on that consumer. How are they feeling? I think we know the answer, but anything, again, that really falls way below forecast is going to set off alarm for traders. So it's definitely something to pay attention on. And is the government going to shut down? Are we going to kick the can down the road? It looks like the House has put forth a relatively plain bill without a lot of the fluff in there. It gives the administration a little bit more leeway with regards to spending and cuts and so on and so forth. It looks like obviously it's going to pass the House, but it has to move over to the Senate. In the Senate, they're going to need about 6 Democrats to come on board should all Republicans vote yes for it in order for it to pass. So it's going to be really interesting to see, is there going to be fight? Is there going to be something where they can just kick the can down the road to September and allow this administration to do what it believes it's doing, to right the ship, so to speak, with all the layoffs, all the craziness that's going on and swirling around? They believe they're on the right path. Do they get the chance to just kind of get a bill passed? Or are we going to see a fight, and are we going to see a temporary shutdown of the government? They're all furloughed, so they'll all get their money. But again, it's all perception, right? It puts people in quicksand. It creates angst. It creates more uncertainty. So it's just really something to watch. And wouldn't you know it, it's on Friday. So that's when it's actually up, although I think they're going to try and solve it prior to that. So is it just a transition, or recession fears are mounting? So today, a lot of recession talk is starting to hit the headlines, right? We saw the Dow massive sell-off today. We saw treasuries do really well. The fear is now really turning into all these policies. Are they going to push us into a recession? And number one, it takes more than 6 weeks to push any economy of this scale into a recession. So if we were going into one, the underlying belly was already there. I think we're going to avoid it. I don't think we're going to fall into a big recession. I do, however, believe that we have a lot of volatility and we have a lot of correction that needs to happen. And let's just be honest. There's no way that the federal government could continue to operate at $36 trillion, $37 trillion. If we look at what's really been going on, the government's been masking the fact that we have a slowing economy. They were just throwing dollars, whether it be to employees so they could spend, whether it be to all these programs, whatever the case may be, they were spending like a machine. And it's something that eventually the law of economics are going to catch up with that, right? You can't just keep spending and not pay the debt. So look, unfortunately, it's got to happen now. It's got to happen under this administration, and they're going full board. So that's why you have all this uncertainty swirling, and now you have recession fears coming in because no one expected this administration to move at this pace. We have entire government agencies just being scrapped. We have over 10,000 government employees have been let go. So the rapid pace that all this is going on, I think is catching a lot of traders, a lot of people, obviously a lot of people in the media off guard. And I think it's easy to talk about the fear side of it as opposed to where we come out on the other side. This past weekend in a live interview, and I don't know if Trump does any other, right here, they asked him if he was expecting a recession this year, and he replied that although he hates to predict such things, there is a period of transition because what we're doing is very big. So again, it falls back on whatever you believe is going to be a transition where this now bleeds, in my opinion, into Q3. It could go into Q4. could last for a majority of 2025, right? Until we start getting into next year, where you're going to have a lot of politicians start to focus on the re-election bid because we have those 2-year terms coming up. Or do we really fall into recession? And I'm in the camp that we're going to go through a very volatile transition. I think we're going to see some positives coming out of it. We're going to get some positive news. We're already seeing some manufacturing, private sector jobs pick up, but all of that's going to take time. Do I think we avoid the big recession? I really think we do. I think we do avoid that. So the good news, though, however, is although it's going to be bumpy, we are going to see lower interest rates, which is fantastic. People get to refinance, right, that have been sitting around for a couple years now, that are in the 7.5%. They can now get into the 6s, maybe even into the 5s. So make sure that you're calling your mortgage professional for that information. And the other thing it's going to do, the people that are willing to take risks are going to be the big winners. Because during this transition phase, we're not going to fall into a big recession, in my opinion. It's going to last years. This is going to be a 2025 Q3 transition period here, up to Q3, bleeding into Q4. And coming out on the other side, it's going to be looking pretty good, in my opinion. So given that we're moving into this, let me take a sip of my wonderful coffee. It's so good. Yes, did I bring coffee back from Colombia? I did. I would have been a fool not to. Look at my little cup. It's so cute. Anyway, all right. So now that we know, right, we're in very uncertain times, I wanted to stress that we as professionals can't fall into quicksand as well. We need to be proactive, right? This is where we have to shine. We need to be picking up the phone, calling people, talking to them about this, addressing it head on. Often when there's a problem or uncertainty, everyone doesn't want to talk about things, right? A lot of people box everything in. They're not sure, so they don't really want to make a move. They don't want to say something to upset somebody. So I believe right now is a great time to strut our stuff. So I just brought a couple points. I'll share them with you. Take them for what they are, for what they are, as always. Implement them if you want. But I think right now the agents that are going to do the best are going to be the ones that are proactive. Number one, break down mortgage rates and affordability. Really explain how these dropping rates, and maybe get a chart. Who has one? Yours truly. Happy to share it with you. What a quarter point difference can mean to them. What a half a point difference can mean to them at different loan amounts. What 3/4? What a point. Talk to them about the positives of what's going on and how interest rates are creeping down and how that can benefit them from a purchasing power standpoint or a refinance standpoint. So I think that's great. And always be encouraging them to lock in these valleys, right? You may start at a rate of 7%, you could get 6.5. You may start at 6.5, now you're at 6. Don't get greedy. Help them understand that. Highlight recession resistant areas. Look, we've been down this path before. We just had it with the pandemic. We had the crash in 2009. History is our best teacher. Realizing the neighborhoods that tend to be able to sustain their level of pricing during these times. Educate yourself on those. Do the homework. Know what they are. Help your clients navigate this type of uncertain market. Be proactive with them. Show them some numbers. And I guarantee you're going to get some people that will come off that fence they're sitting on. Negotiate smart, in a slowing market. Leverage longer days on market. You see a house that's sitting out there. I want to make sure you do that. I think you continuously still talk about potential buy downs for your clients. Now you'll be able to get them maybe into the high 4% range, which is crazy, right? And also be talking about any type of seller concessions. You are in the driver's seat right now. In my opinion, it is a buyer's market right now, especially in Austin, Texas. Connect with the Solid Mortgage Broker. Not sure if you know one. Hello. Anyway, get with somebody that's really knowledgeable, that knows the industry, that studies it on the daily, really knows what to watch in the marketplace, can formulate an opinion, can give some good advice, but at the end of the day, knowing it is the client's ultimate decision. But you are there as their guide, as their confidant, to give them the amount of knowledge and professionalism that you have to help them navigate that. So make sure they're talking to somebody that you possibly know well, or at least you're giving them a couple cards to say, this person is somebody that could really help you out and help you understand and navigate this complex market. And the last thing is just, hey, look, let's not sugarcoat it. Let's make sure we're setting proper expectations. Things could take a little bit longer. From a searching standpoint, the volatility could cause some angst. Have some empathy, but set some proper expectations as far as timelines and all the bumps in the road that could come along. All right, y'all, I hope you have a wonderful week. I'll be coming at you once again with a daily dose. Make sure you subscribe to the Mortgage Mouth on YouTube. I would love a subscription. I drop a 2-minute video on the daily letting you know what's going on. Come to you every Friday with a wrap up. And I'm going to cut a video this week with regards to refinancing. Everyone talks about when is a good time to refinance. I'm going to break down some numbers when I talk about a no-cost refinance, when it might be appropriate to pay for a full refinance, timelines, things like that. So I plan to break that down this week for you. So make sure you tune in, and it might be something that may be very valuable, not only to you, to some clients that you may have out there. All right, y'all, have a great week. Keep selling, and I'll talk to you soon. Cheers.